prepare for a lot more oil price volatility, both up and down, going forward. So there are some really interesting oil market news articles that have come out in the last couple weeks. I just wanted to do an oil market update for you guys instead of behind the paywall for patrons, although there will not be any oil stock picks mentioned in this video. We got an update from OPEC, and I have a chart there on the right-hand side of your screen. This is from an oil hedge fund. The guy's name is Josh Young. He's been an oil executive at oil companies. He's also a well-known oil investor for over a decade now. I've interviewed him in the past in the archives of my YouTube channel over the last 10 years. And he posted this really interesting chart from his oil hedge fund. And I have additional research articles that his oil hedge fund, Bison Research, has put out over the last 6 or 7 months about OPEC and OPEC Plus not meeting their oil production quotas. So over the summer in 2021, OPEC and OPEC Plus did not meet their oil production quotas. So they said they were going to increase oil production as oil prices rose, and they did not. And here in February 2022, despite high oil prices, OPEC Plus did not even meet their production quota. So this trend has been true since at least summer 2021. There are big CapEx problems, both maintenance CapEx and growth CapEx on the supply side with these national oil companies in OPEC, OPEC Plus, and emerging market oil producers like Ecuador. I've written articles for patrons in the past over the last couple months about oil production problems in Mexico with Pemex, but you could pretty much single out all of these national oil companies. So as a general rule, and most people are not familiar with this, with commodities companies, you have to spend many billions of dollars in maintenance CapEx and then in growth CapEx in order to substantially grow production. So for OPEC to grow production 1 million barrels per day, they would have to spend many billions of dollars on maintenance CapEx and growth CapEx, and that would take probably at least 12, 18, maybe even 24 months or longer to grow oil production that much. And this is why oil producers like Venezuela, their oil production has totally collapsed, and they will not be able to grow oil production by 1 million barrels per day or more to get back to old levels of 4 million barrels per day without making massive investments into CapEx. The Venezuelan government won't do it, and they will not allow foreign direct investment. Now, the Chinese may do it, but then China will have claims on all the oil. So we're also seeing research come out, and I'll attach links to the articles from the giant oil trader Vitol talking about how demand for oil and gasoline is actually getting close to 2019 levels. I think they said it might be over 2019 levels. So I'll attach an article to that below the video in the information and description section. And despite high gasoline prices, despite California and politicians in Canada, I think Quebec, trying to subsidize consumer demand for gasoline. I think also Japan did it a month or so ago, maybe 6 weeks ago. The Japanese government also issued a subsidy to maintain demand for gasoline without allowing these investments to be made on the supply side. You have so many governments all over the world that have banned oil and natural gas drilling, or when oil prices rise, they threaten to tax these oil companies so the oil companies don't have free cash flow then with windfall profits taxes to reinvest free cash flow into replacing oil reserves and growing oil production, which would solve long-term the oil price because you need more supply, and that's what will lower prices because demand is starting to come back online. So overall, the oil price has a lot of volatility. If oil continues to go higher at some point, it may crash the entire economy, but there are still enormous problems on the supply side with oil, and a lot of them are because of bad policy from governments. Finally, if you like content like this, I want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content research, financial education, and analysis than I provide in this short little free video, there are now over 200 articles and audio podcasts behind the paywall, exclusive for patrons, all for only $5 a month. I think it is one of the best deals out there. And just in the last 33 or so weeks, there are now 48 new articles and audio podcasts. I just put out 2 short articles this week, one on uranium, a uranium update, and also this week there was an article update on the potential top takeover target for a junior gold miner. And again, that's all for only $5 a month, exclusive for patrons. So please check that out. So if I could wrap up this short little video very quickly, bad policy across the board by governments for energy. I think Germany is finally going to approve their first LNG import terminal. Now, they've been importing LNG through other ways, through other terminals in the European Union. There are different ways to get the natural gas into Germany, and that's why over the last 2 years, Germany's natural gas dependence on Russia has been halved. But their dependence on Russian natural gas imports will decrease further over the next 2 or 3 years. But the bottom line here is that demand is not being destroyed because of high gasoline prices, and gasoline prices here in the United States are averaging well over $4 a gallon. If the Biden administration wants to remove the gasoline tax, the states are not removing their gasoline taxes. California still has almost 70 cents a gallon gasoline tax, and there's other taxes, I believe, at the local levels besides at the state level on gasoline as well. So overall, just bad policy. You have these governments in Japan, Quebec, California, at least proposing, or they've already issued stimulus checks to try to subsidize people buying gasoline. I think it was $400 or $500, something like that. Just bad policy across the board, especially on energy. Government politicizing energy has created these problems. And while oil has been very volatile lately, it briefly went down substantially last week on options expiry, and then it rallied substantially earlier this week, and then it's down a little bit today when I'm recording this interview late on Thursday night. Expect a lot more volatility up and down in oil, but unless there's demand destruction for oil and gasoline, or the supply crunch is fixed, expect a wide trading range with more volatility in oil going forward.